Taxing powers of barangays. Question. What taxes, fees, or charges may be imposed by barangays? Answer. The following taxes, fees, and charges may be levied by barangays. Retailers with fixed business establishments, with gross sales or receipts of 50,000 pesos or less for cities, and 30,000 pesos or less for municipalities. If it exceeds 50,000 pesos or 30,000 pesos, taxes must be paid with the city or municipality. Service fees or charges. Barangay clearance. Other fees and charges on commercial breeding of fighting cocks, cockfighting, and cockpits. Places of recreation which charge admission fees. Billboards, signboards, neon signs, and outdoor advertisements. Common revenue-raising powers. Question. What are the common revenue-raising powers of the local government units? Answer. The common revenue-raising powers of LGUs are service fees and charges, public utility charges, and for the operation of public utilities owned, operated, and maintained by the LGUs within their jurisdiction. Toll fees or charges. The Sanggunian may impose toll fees or charges for the use of any public road, pier, or wharf, waterway, bridge, ferry, or telecommunication system funded and constructed by the LGU. Exemptions. Officers and enlisted men of the Armed Forces of the Philippines, and members of the Philippine National Police on mission. Post office personnel delivering mail. Physically handicapped, and disabled citizens who are 65 years or older. Community tax. Question. Who may impose community tax? Answer. Cities or municipalities may levy a community tax. Question. Who are liable to pay community tax? Answer. Natural persons are required to pay community tax provided 1. Inhabitants of the Philippines. 2. 18 years of age or over. 3. Regularly employed on a wage or salary basis, for at least 30 consecutive working days during any calendar year, or engaged in business or occupation, or who owns real property with an aggregate assessed value of 1,000 pesos or more, or who is required by law to file an income tax return. Juridical persons engaged in or doing business in the Philippines shall pay an annual community tax of 500 pesos, and an annual additional tax.
Question. Who are exempted from community tax? Answer. The following are exempt from community tax: diplomatic and consular representatives, and transient visitors when their stay in the Philippines does not exceed 3 months. Question. Where should community tax be paid? Answer. The community tax shall be paid in the place of residence of the individual, or in the place where the principal office of the juridical entity is located.
Common limitations on the taxing powers of local government units. Question. What are the common limitations on the taxing powers of the local government units? Answer. The exercise of the taxing powers of provinces, cities, municipalities, and barangays shall not extend to the levy of the following. A. Income tax, except when levied on banks and other financial institutions. B. Documentary stamp tax. C. Taxes on estates, inheritance, gifts, legacies, and other acquisitions mortis causa, except as otherwise provided herein. D. Customs duties, registration fees of vessel and wharfage on wharves, tonnage dues, and all other kinds of customs fees, charges and dues, except wharfage on wharves, constructed and maintained by the local government unit concerned. E. Taxes, fees, and charges, and other impositions upon goods carried into or out of, or passing through, the territorial jurisdictions of local government units in the guise of charges for wharfage, tolls for bridges or otherwise, or other taxes, fees, or charges in any form whatsoever upon such goods or merchandise. F. Taxes, fees, or charges on agricultural and aquatic products, when sold by marginal farmers or fishermen. G. Taxes on business enterprises, certified to by the Board of Investments as pioneer or non-pioneer, for a period of 6 and 4 years, respectively from the date of registration. H. Excise taxes on articles enumerated under the National Internal Revenue Code, as amended, and taxes, fees, or charges on petroleum products. I. Percentage or value-added tax on sales, barters or exchanges, or similar transactions on goods or services, except as otherwise provided herein. J. Taxes on the gross receipts of transportation contractors and persons engaged in the transportation of passengers or freight by hire and common carriers by air, land, or water, except as provided in this code. K. Taxes on premiums paid by way or reinsurance or retrocession. L. Taxes, fees, or charges for the registration of motor vehicles, and for the issuance of all kinds of licenses or permits for the driving thereof, except tricycles. M. Taxes, requirements for a valid tax ordinance. Question. What are the requirements for a valid tax ordinance? Answer. The requirements for a valid tax ordinance are: 1. The tax is for a public purpose. 2. The rule on uniformity of taxation is observed. 3. Either the person or property taxed is within the jurisdiction of the government levying the tax, and 4. In the assessment and collection of certain kinds of taxes, notice and opportunity for hearing are provided. Taxpayers' remedies. Question. What are the remedies available to the taxpayer? Answer. The following are the remedies of the taxpayer. Administrative. Before assessment. Question the constitutionality or legality of tax ordinance or revenue measures on appeal. Declaratory relief. After assessment. Protest. Claim for refund or tax credit. Redemption. Compromise. Judicial. Court action. Declaratory relief. Injunction.
Protest. Question. What is the procedure for protesting an assessment? Answer. Under Section 195 of the Local Government Code (LGC), the protest of assessment proceeds as follows. 1. Treasurer or duly authorized representative issues notice of assessment. Assessment states the nature of the tax, fee or charge, the amount of deficiency, surcharge, interest, and penalty. 2. Taxpayer may file a written protest with the treasurer within 60 days from receipt of the notice of assessment. Otherwise, assessment becomes final and executory. 3. The local treasurer shall decide the protest within 60 days from the time of its filing. If he finds the protest to be wholly or partly meritorious, he shall issue a notice cancelling wholly or partially the assessment. If the local treasurer finds the assessment to be wholly or partly correct, he shall deny the protest wholly or partly with notice to the taxpayer. 4. The taxpayer may appeal with a court of competent jurisdiction within 30 days from receipt of the denial of the protest. from the lapse of the 60-day period prescribed if there is no decision. If no appeal within this period, the assessment becomes conclusive and unappealable. 5. Appeal to Court of Tax Appeals (CTA) division within 30 days from receipt of the decision if the Regional Trial Court (RTC) exercised its original jurisdiction, but if the case originated from the Municipal Trial Court (MTC) and RTC exercised its appellate jurisdiction, appeal is to the CTA and bank under Rule 43. If the division decides against taxpayer, motion for reconsideration to be filed within 15 days with the same division. If motion for reconsideration is denied, petition for review filed with CTA and bank. 6. Appeal to the Supreme Court within 15 days.